Welcome back to Marketsall YouTube channel. In today's episode, we're diving into the latest economic developments and their impacts on financial markets. We'll cover the recent Fed meeting, the latest CPI data, and the ongoing geopolitical risks in the Eurozone. Stay tuned to find out how these factors are shaping the economic landscape and what they mean for your investments. Hi everyone, I'm Roy Güllüoğlu. Welcome to another episode of Market Update, featuring by Marketsall and Rationale. Before we get started, make sure to subscribe to the channel, and if you find this video helpful, please give it a thumbs up. And if you have a question, please leave us a comment below to the video. We will be glad to answer. Yeah, let's begin with the covering economic calendar and review of the highlight events. First of all, about the CPI data, deflation in core goods inflation is increasing. That's a good sign. The annual figure has dropped minus 1.3% to minus 1.7%. Meanwhile, the core services inflation continues to see annual changes 5%. In May, core services fell from 5.3 to 5.2%. The items showing a monthly decline in core are like new vehicles, clothing, and transportation services. Housing has been increasing by 0.4% for the past 4 months, which is still concerning. Thanks to the decline in gasoline price, the headline monthly change remained flat, which was the good side of the data. So, in conclusion, although the lack of support for the disinflation process from the housing side, that may seem hawkish, that may perceive hawkish. The inflation data that we receive in mid-June was more market friendly compared to the data from the beginning of the year. As I keep trying to recall that in the first, especially 2 months, we received really bad inflation data in terms of the path of disinflation. So with this data coming, let's say, more market friendly or disinflation friendly, we saw the impact on 10-year yields. Let me show you where we at currently in US 10-year yields and how I monitor 10-year yields. Here you see the 10-year yield chart in a daily basis. As you can see, we're below 200-day moving average, this red line. The blue line is 50-day moving averages, and black one is this one is 21-day moving average, and the gray one is 10-week one. And here, especially, rather than checking this 10-year yields, my perception, as I mentioned before, is checking through SOFR futures. Also in previous videos, I had talked about this one. I keep monitoring if we're gonna see a potential reversal from after this downtrend in this one. This is a weekly chart, and when you come here, there's a really nice symmetrical triangle chart pattern. And if this chart goes up, that means yields are coming down. So that's how I monitor yields. Actually, if I see a breakout from here, my first target would be for sure 200-day moving average, and after that, the potential continuation would mean a shift in the trend for sure. And yeah, when I come back to the economic calendar, the Fed statement we received that week also, it was not the last week but the previous week. I'm just trying to cover what happened recently and trying to figure out where we are right now. The Fed statement emphasized the improvement in the inflation process, especially for April and May. The dot plot currently shows one rate cut for 2024, and that number is down from 3 rate cuts, which was projected in March. Also, inflation forecasts revised higher, and for 2025, the dots indicate 4 rate cuts instead of 3 rate cuts. Additionally, the Fed no longer perceives a lack of progress towards a 2% inflation rate target, inflation goal, but they rather expect a modest further progress in inflation instead. Following the CPI data, the premiums seen in precious metals, Bitcoin, and indices were retracted after the Fed meeting, actually. So, like CPI data kind of perceived as dovish, then the Fed meeting perceived as more hawkish. Personally, I believe that while the Fed's reduction in expected rate hikes from 3 to 1 may be perceived as hawkish in the short term, but the convergence of members in the dot plot distribution reduces uncertainty, and that's a good sign. Let me show you. This one is the recent meeting, and for 2024 it's like this, and for like the previous in the March one, as you can see, like indecisiveness is too much here, as you can see. At least like since the market is so uncertain, while the indices are going higher with the hype of the AI, but at the same time it's not showing that like you can see that that strength is not spread to the rest of the market. That's a bit risky. Inflation was expected to come down, but it's not coming down. So there are a lot of uncertainty. And to see such dot plot, the new one is here. At least market is like market's expectation range is much more narrow, and especially with that's a good sign in terms of uncertainty. Yeah. Like I think that's why, like I think in the medium to long term, the Fed, the last meeting may not be perceived as excessively hawkish. So now let's check the current situation of like a gold, silver, Bitcoin, and major US indices in charts. So first of all, let me start with the gold. Generally, I start from higher time frames, which is weekly. Let's say here is a huge consolidation that everyone like was following this one, and perfect breakout, moving great. Here in the weekly chart, this is 10-week moving average, and this is 40-week moving average. These are pretty high like higher long-term moving averages. That's why like potential breakdown or breakout might mean something. So when I come to like a daily basis, as you can see after the breakout, you see that there's a consolidation, which is pretty normal, that is highly expected. But a potential breakdown that comes from, let me see, how long is this rectangle? Like it's 51. Let's say if we see a breakdown here, maybe just that would be a 2-month long rectangle chart pattern that might converge to this red line of 200-day moving average, and which is also expected. The most important part about here is like to not lose around these levels to like 2200 levels. I mean that those might be tested. That's so possible, and which is normal technically, especially when you check in the weekly, because in such breakout we should see some profit taking activity, and that's what we're seeing right now. And when you check the silver, I monitor it like with this rectangle chart pattern breakout. As you can see, really nice breakout, pullback, and you can see the recent resistance acted as a support and moved really strong. And currently, it's just above 50-day moving averages. I keep monitoring it, and like a potential breakdown just below 50-day moving average would be, I would take this as a cautionary sign. And Bitcoin, in the weekly chart, there's a nice base here. After that base, little pullback. This is generally called a couplet handle chart pattern, and it's like a pulling back right now. And this is also really normal. When I come to the daily chart, I expect to see, let me just omit this big line. I might expect to consolidate just below here, or this might act as ascending triangle chart pattern, which is also a bullish continuation chart pattern if we can see any reversal from here. But I wouldn't be surprised if this comes down up until this 200-day moving average, and that when it comes to there, that will be the biggest test of Bitcoin to me. So this is S&P 500 chart. Actually, this is S&P 500 ETF, not the index, not the index, not the future one. This is the ETF. I just wanted to show you this one. Okay, there's a, you can call this like a, let me say, a cup with handle, like a breakout and going like this. But I'll show you something else. Here you can see this is S&P 500 equal weight ETF. That means if you just take the weighting of the companies just according to market cap, and like let's say there are 500 companies, and if you divide the weight by 500, you get this indices. Actually, this is an ETF also, Invesco's ETF. And as you can see, like since the beginning of 2004, let's say here, it's around like a 5% movement or something. But when you come back to the SPX, the difference is huge. That's because the main source of this, sorry, my bad, from here to here, the main source of, as you can see, 15%, like 10% if it's approximately. I didn't like check like very strictly, but what I'm trying to say is, as you can see, there's a huge difference between equal weighted S&P and the regular S&P 500. The reason is the main movement in S&P 500 that we see is AI side, Nvidia side. Nvidia became the most like the biggest company in terms of market cap. Then it lost. But yeah, what I'm trying to say is all like cybersecurity, all like chip production related companies carried in this S&P 500 index up until here. But you can't see any like that. This is like any spread from like this technology side or the communication side to the rest of the market. And if you want to monitor like if there is a spread from this side to the rest of the market, you need to follow Russell 2000 like small cap index, and like that's how I monitor this one. As you can see, there's a really nice consolidation in the weekly chart, but after this it tried to like I don't know, break out. I mean, how many times here? 1, 2, and 3. But you know, it's I mean, it couldn't move higher. But yeah, as long as like also it lost its short-term moving averages, but I keep monitoring this potential. It's not consolidated yet for me, but there might be a triangle formation here, symmetrical triangle, and you better keep an eye on Russell 2000 index to see that if you're gonna see any spread from technology side to the markets in general. Quickly, let me show you the how I'm monitoring the oil. This is a weekly chart. I'm monitoring this symmetrical triangle chart pattern here. This after downtrend here in the below, like sorry, it's consolidated here, and it might act both ways according to the breakout or breakdown. I would be acting for this one, and for like, to be honest, like if I don't personally believe that if it breaks out that the general economy of the world can bear to this much of like $100 oil price. That's why like downside seems more likely to me. But technically, I mean, technical side would be the trigger of my potential trade. And the XY, I keep monitoring this triangle, symmetrical triangle chart pattern. And if I see a potential breakout from here, it might act, it might go, let's say, the target of the chart pattern is around like a 115 levels. And yes, apart from the economic calendar, actually, political risks were looming across Europe in previous weeks. Election decisions and parliamentary elections were on the table. In France, uncertainty in European equity markets caused the selling pressure. Euro USD dipped to around 1.06 levels, and this decline occurred despite the US inflation data indicating ongoing disinflation. So the sales actually were driven more by uncertainty on the euro side rather than developments in the US. considering the uncertainty in the Eurozone and ECB's front moving in rate cuts, I might seek for a short opportunity in Euro USD. But if we see a PCE data really in line with the previous CPI data on this Friday, that will bring some weakness to USD. And how could we monitor this political uncertainty? That's the question, actually. One way to track the one way is to track this uncertainties, the German-French bond yield spread. Previously, during the periods of all Italian, Spanish weakness issue happened, that was this spread between those countries with Germany was the indicator that the market was following. So let me show you quickly those spreads. Here you can see after the political uncertainty, you can see that how the spread moving. It's coming a little bit back currently, but yeah, I'll be watching this one. And here, while we're speaking in Euro USD, this is how I monitor it. As you can see, the price is just below all major moving averages for me, and it's prone to potential breakdown maybe. But yeah, I think PC data will be pretty decisive on this one on Friday. And the Bank of Japan was considering a reduction in its bond buying program, but didn't make any changes. Depending on July data, there could be an interest rate hike. The lack of change initially pushed USD yen up to 158 levels, but with the possibility of an interest rate rate hike, it's later declined to around 157 levels. Here, let me show you the charts quickly. Yeah, here you can see that's the, again, I'll start with the higher time frame of weekly one. Let me start with monthly, actually. Here's really nice head and shoulder bottom formation. It broke out in the monthly and it's moving. So the main trend is for sure going up. And in the weekly one, there's a really nice cup with handle, as you can see. And the potential chart pattern price target approximately is around this level. And when I come to daily chart, as you can see, let's say another cup with handle or ascending triangle chart pattern, a breakout occurred, it pulled back. We might see a little bit a retracement, but I'll be watching 157.7 levels if the potential continuation of the short-term trend of USD yen. And let me come back to here. And yeah, in May, retail sales data. Sorry, just yeah. In May, sorry. Before that, I'd like to show you. I just skipped the Michigan consumer statement, I guess. Yeah. So Michigan. Also, we received the Michigan consumer sentiment that came in worse than the expectation. Here, I guess. Sorry. Yeah, the consumer sentiment came in worse than the expected. While here you can see the 1 year inflation expectation. Here you can see came a little bit higher than expected, and also 5-year inflation. So here, this Michigan consumer sentiment data in general says that the economy is we're receiving from the growth side, we're receiving some bad signals, but at the same time, inflation is concerning. So this is a bit signaling a hard landing. Also in May, retail sales and retail sales control group, which we, as you can see here, on Tuesday, last Tuesday, we received this one. First of all, the control group, that means goods are counted in the GDP calculation. That's why it's important in order to monitor the potential impact on economic growth. So both retail sales and retail sales control group data reported below expectation. Additionally, there was a negative revision for the previous month of April. That's a good sign in terms of disinflation. In May, also, there was a decline in housing starts data. Combining retail sales, housing starts, and Michigan consumer sentiment data, we can say that the growth-based risks are beginning to emerge. The decline in industrial production in China also indicates that this situation is not unique for the United States alone. So in general, it's better to keep a close eye on growth-based indicators across the world. So in order to monitor the general indices in the world, I rather to keep an eye on all country world index. Here you can see this is an ETF. Actually, it includes all like major countries. You can check, you can Google the name, and you can see what's inside. Here in the when I come to like a daily, there's a really nice consolidation here, and I'm monitoring a potential breakout from here, but it's still just inside this channel. And as you can see, the midline of the channel works pretty well here. Try 1, try 2, try 3, breakdown. Here tried again, and yeah. And if I see a potential movement, I will be following the midline of this channel. The Bank of England, when I come to the calendar back here, you can see, yeah, the Bank of England kept interest rates unchanged. The likelihood of an interest rate cut in August has increased. Here, GBP USD. There's another symmetrical triangle here that I monitor. Sorry, let me fix this one. Yeah. As you can see, it's same with euro dollar actually. I think my personal belief is rather than European side or UK side, because it's more like certain compared relative to US side, since like they're more eager to, I'm talking about European side, eager to get into rate cut path. In that sense, like in that terms, like this PC, the inflation data will be crucial for this. If we see a potential data in line with the CPI data, we might expect to see that pound to come lower, but just in the vice versa situation, a potential breakout will be followed. And also, what about like that's the major event will be, I was gonna check in the calendar for this week. The major event will be PC data, as I mentioned. And apart from that, last week, another data that supports that the economic growth is like still under threat is Philadelphia Manufacturing Index. As you can see here, the forecast was 4.8, previous 4.5, and it came 1.3. That's pretty concerning, actually. Also, Atlanta Fed GDP, it's below its forecast, and it came down, not that big, but yeah. And Eurozone PMI, as you can see, came lower than expected. So in general, in the world, I think as time goes on, the economic growth indicators becoming more valuable, and I think like inflation side is less valuable in Eurozone side, but still much important in the other side of the Atlantic. And yeah, in general, that's all I'm going to talk about this week. I hope you found the information valuable. If you enjoyed like what you watched, please consider subscribing to our channel for more videos like this. And don't forget to hit the like button. Thank you for watching, and we'll see you in the next one. Have a good one.